Morning, Leslie. Everything okay?
Morning, Mia.
Good morning, sir. Can you hear me?
Yeah, very clear with your big microphone.
Good, good. No, my apologies. I saw your message yesterday. I was on the road for 8 hours. I left home 10:30 because today is locked. This weekend is locked down.
So how were you on the road?
Well, I had to go to the food store. I had to go borrow some money to go to the food store.
All right.
And then we had to do some stuff.
Yeah.
Because we can't leave the house today and tomorrow until Monday morning. So,
Yeah.
So 8 hours I was on the road yesterday from 10:30 to after 4.
Yeah, I had to queue at two supermarkets here. The queue was right around the car park twice outside. 2 hours I queued.
Really?
Yeah, it's shocking. We've got 26,000 dead now.
26 from 20,000, 6,000 in a few days?
Yeah.
Can't be.
It is. It's 26,000 dead now. That was the figure as last night, yeah. Because what's happened is it spread into what they call care homes. Do you have care homes in Nassau?
Like where somebody goes to the house to take care of the people? Like there's like live-in nurse or something like that?
No, that's carers. This is where it's like a nursing home. It's where people can go when they're old.
Oh, okay, yeah, we call them old folks home, yeah.
Oh, yeah, that's it, yeah. So what happened was they hadn't been including the statistics from the old people's homes. See, we've got Leslie, Andia, Thea, Charlene. Can I just check with you, Miguel, that we've got
Good
this?
morning.
Hello, good morning. If I share my screen, can I just check with you that they've got the other PowerPoint, you know?
Yeah, they should have 2 PowerPoints, hopefully.
You're recording already, are you?
Yeah, I'm recording already.
Oh gosh, just as well I didn't say something
I'm class.
pretty rude to you, yeah.
Not a problem. I'll cut it. I'll cut it when I'll cut the
Cut what?
part off when I upload it.
Yeah, this is the other one. Can you see it?
Firm right risk management. Yeah, hopefully, ladies, you all should have this.
Whoop, it's gone. Well, you sent both, didn't you?
Yeah.
No, that won't move. Just a minute. Come on, move. That's it. It's getting bigger now.
Uh-huh.
All right. And then you send out that Barclays extract because that's the risk management strategies that we need to look at.
Yeah, I sent it. Sorry, ladies. I just sent it out this morning.
Yeah, so ladies, if you can check your email, you should have a handout on Barclays risk management strategies. It's about 5 or 6 pages, PDF. Miguel emailed it this morning. Ah. There's some chats coming in. And yes, received. Thea received it. Charlene received. That's good.
Good morning.
Good morning.
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 Morning. I'm here with a headache, but I'll just listen in.
Good morning. Good morning.
Oh dear. Okay. You got a headache, did you say?
Yes, I do.
Oh dear. Got any paracetamol or aspirin?
I do, but I'm trying to stay away from that.
Oh, okay. Yeah. I was going to say, I've got one here, but I can't really get it to you over 4,000 miles. But if I take it, you could pretend.
Mm-hmm.
A virtual paracetamol, that would be new, Miguel, wouldn't it?
Yep.
Oh, we could make a fortune with that. Why didn't we think
That'll
about that
be
before?
a real money maker.
Wouldn't it? Yeah, instead of doing all this, we could be making virtual paracetamols.
Right?
Send one to Donald Trump.
I love Donald Trump, boy. I love Donald Trump.
See if you'll inject yourself with a paracetamol.
Well, he's willing to do a Clorox.
Yeah,
Miguel, you need a paracetamol now.
Okay, so where's the list then, Miguel? We've got 9 people. Let's have a look. So we got. Can you see that on the screen? Yeah, we've got Thea, Andy, Inga, Nashan, Leslie, LS, Burnside, Charlene, Candice. Okay, so should we make a start, Miguel?
Yep, you go ahead.
Yeah, let me just move that. Okay, well, good morning, everybody, and welcome to session 3 of module 1. So what we're going to do this morning is we'll take a look at some of this aspect of firm-wide risk management that we're discussing before, but this time we're going to extend it into the area of managing the risk of financial crime, which of course is a very important area globally and very important, within the Caribbean region. So this section is new. We added it this year because of some comments once again, from within the Caribbean Union about financial crime prevention, etc., etc. And then after that, we'll take a look at a very, very interesting document which shows when we were looking at Basel II, and I'll put the diagram back on a bit later after we've done these slides. And we can see, under Pillar 3 was the director's responsibility of reporting and disclosing information on risk management. So what we've got is something which really adds a lot of weight and summary to Module 1, because we're going to look at the leading international bank, Barclays, and look at their risk management practices. Now, the actual whole document is over 100 pages, but the bit that we're interested in, from our enterprise-wide risk management approach is the 4, 5, 6 pages that we sent out to you this morning. And it's a really good document, and you'll see it highlights the Barclays approach to risk management strategy. So it's very much a strategy-focused diagram. And we'll look at this and we'll examine it and see, what we can get out of this that might assist us in further developments of our risk register, for example, or if we're, looking, Latasha, from the central bank, once again, it's another framework, some more ideas to support the excellent work that you're doing there and have been doing for quite a number of years. So I'll just try as an experiment, putting this on the slideshow and see what happens. Yeah, that's okay. I can still see Miguel, unfortunately, but there we are. Sorry. No, he's looking very smart.
No, it's much better, but it's bigger though. It's much better.
It's bigger. Okay, that's good. Right, I've just lost some of the words. That's the only thing. Can I move these pictures around at all? Oh, yes, I can. Yeah, well, that's good. Not quite as far as I wanted to. So this was some more breaking news. This was February last year. The European Commission, you might be aware of this. We could ask Natasha from the Central Bank whether they got notification of this, but this was the European Commission adopting a new list of countries with what they described as weak anti-money laundering and terrorist financing regimes. So have you seen that before? That list?
Yes, I'm aware of it.
Good. And the Commission adopted a new list, 23 countries, where they indicated that there were strategic deficiencies in their anti-money laundering and counter-terrorism financing frameworks. And what we're going to take a look at shortly is a framework document from the Financial Action Task Force Board, which again might be of assistance for you here in Nassau. So the aim of the list is to protect the EU financial system by better preventing money laundering and terrorist financing risks. As a result of the listing, banks and other entities will be required to apply increased checks of due diligence on financial operations involving customers and financial institutions from these supposed, I say supposed, high-risk third countries to better identify any suspicious money flows. And I should pause there right now because I know of the very strong work for many years by the Bahamas Association of Compliance Officers. Miguel refers to them as BACO, and you've had lots of seminars and trainings on this. So on the basis of this new methodology, which reflects stricter criteria, the list has been established following what they describe as an in-depth analysis. Oh, gosh. Yeah, the comments they're making is, dirty money is the lifeblood of organized crime and terrorism, and they're encouraging these countries to remedy the deficiencies. Miguel, you're causing us some feedback because you're on your mobile there, or whatever you're on. It's on your phone. Okay, so the commission said that's better. You were causing a feedback loop, Miguel, through your microphone, through your cell phone.
Oh, I have everything on mute. All right, no problem.
Right. But still, the commission's
One student is trying to get in. That's what happened. Sorry.
Okay.
Let me see if
Okay.
I can work it out.
Okay, right. You're going to let them in then?
Hi, everyone. Sorry, I was trying to log in.
Okay, Cassandra.
I'm in now.
Oh, you're in now. That's great.
Yes. Morning, everyone.
Yeah, morning.
Morning.
Morning. Okay, we're just into the second slide there of the other presentation. Cassandra, it's the managing risk of financial crime. You should find that.
Yes.
Good.
Go ahead. You can go ahead.
Okay. Yeah, so the Commission stands ready to work closely, with these countries that are listed to try and address these issues. And you'll see some of the suggestions quite soon. So we're still getting feedback, Miguel. So what's money laundering? Well, the goal of a large number of criminal acts is to generate a profit, for the persons carrying out this act. And it's a process where they try to disguise their illegal origin. And this process is of critical importance as it enables the suspected criminal to enjoy these profits without jeopardizing their source. So it's very hard to detect because we can have arms, illegal arms smuggling, sales smuggling, organized crime, drug trafficking, prostitution rings, can generate huge amounts of proceeds, bribery, computer fraud, etc. And they try to create methods and incentives to legitimize these ill-gotten gains through money laundering. You'll know all that already. Let's see, what have we got? So they try to disguise the sources, where they're from. And this is what I mentioned earlier. The Financial Action Task Force on Money Laundering was established in 1989 to develop a coordinated response. So one of the first tasks of the Financial Action Task Force was to develop recommendations, 40 in all, which set out the measures national governments should take to implement effective anti-money laundering programs. And what we're going to see in a moment is some of the highlighted suggestions for us. Now, Miguel knows very well some of my old books. One of them was for Financial Times, Pittman Publishing, called Cash is King all those years ago. That was 1994. And that was followed a bit later by a book for Wiley Publications, Strategic Cash Flow Management. But here we are, Cash is King, in terms of money laundering activities. And this is quite interesting. The second paragraph, I didn't even realize this, there was a euro note which was 500 euros. Has anyone ever seen a euro 500 note? Because that's more than $500 on one note there. Well, you know, last week and the week before we had perfect Zooming sessions with no feedback, but today we got some feedback going on. I'm not too quite sure why. So the role of the board of directors. So here we go once again. The board of directors, you know, need to ensure these controls are in place. Miguel, could you just run through our participant list and see if anyone's got the mic on that's causing some feedback, unless it's you fiddling around again. And the integrity of bank management to be active in this section here. Well, I was saying we keep getting the feedback and I don't know where it's coming from. Now it's stopped that you've done whatever you haven't been doing right now. I think it's each time we see you using your mobile, you're generating a feedback signal. Okay, so the role of the board, you know, very important, just as we saw in all the other risk management processes, that there are essentially 4 principles contained in this statement. So this is right at board level: proper customer identification. Banks are advised to make reasonable efforts to determine and verify true identity of all customers, etc., etc. High ethical standards and compliance with laws, and then cooperation with law enforcement authorities. Policies and procedures to adhere to the statement. And furthermore, banks should ensure that all staff members are aware of these. And finally, internal audit within the institution, you know, to check with compliance and provide assurance to the board of directors or the governing body. So let me just stop there for a second and ask for any feedback on that section to do with the role of the board. Is that similar in your organizations there?
Yes, that seems to be pretty straightforward.
Excellent.
Standard role of a board.
Standard role of the board. Thank you. Okay, well, let's move on and start to look at where this fits in. So we mentioned this last week and the week before, where we've seen this coordinated movement gradually taking place. And you can see right at the top there, there's the Basel Committee for Banking Supervision. There's the International Association of Insurance Companies. And then there's IOSCO, which is the Securities Commissions, which we mentioned last week. So they're making a coordinated effort to, you know, implement these 40 recommendations. And this is the Financial Action Task Force standards encompassing the following aspects: customer identification, which you would know, your KYC, ongoing monitoring of accounts and transactions, record keeping and reporting of suspicious transactions, internal controls and audit, integrity standards, and cooperation between supervisors and other competent authorities. Now here's a picture from the website, the Financial Action Task Force website. And you can see the objectives of FATF are to set standards and promote effective implementation of legal, regulatory, and operational measures to combat money laundering, terrorist financing, and other threats. And there is a picture of, I can't even pronounce his name, Mr. Liu of the People's Republic of China. He became president of FATF on July the 1st, 2019. And to the best of my knowledge, it's the first Chinese president that they've had at the Financial Action Task Force. In the past, it's been mainly US and Europeans. Of course, we don't want to say too much about China at the moment, particularly as Miguel's recording this. So they have this paper, which is worth looking at. I put the reference there. For the purpose of your exam, you won't get a question, you know, based on this paper, but it might be useful for you in your everyday job to take a look at the Financial Action Task Force guidance for a risk-based approach. Anyone familiar with this document? Maybe our lady from the central bank is?
Yes, and at the central bank, we have adopted the risk-based approach where we risk assess all of our entities. Now,
Yep.
depending on the type of the entity, it would determine the frequency of those assessments, and then
Right.
we also refresh them
Right.
once warranted, even if it's outside of the cycle.
Excellent. Thank you very much.
And then we also have the enterprise-wide risk assessment that we
Yes.
require our entities to do on an annual basis. So by the 30th of each year, they must submit to us their assessment of their own entity and
Right.
send it to us. And of course, a comparison is done in terms of what we do internally and
Yeah.
what we see the entity do. But this year is an outlier due with everything that's going on. So we have given extensions.
Extension. Yeah.
So even though they were supposed to begin to us by Thursday past, we have deferred that submission date.
Yeah, well, that's a good idea because of everything that's going on. It's really hard to meet timeline dates and things, isn't it, at the moment?
Yes. And then I could point out too, there's also a CFATF, the Caribbean Financial Action Task Force that exists as well.
All right, great. So you told me last week you've got your domestic CFIs and now you've got the Caribbean Financial Action Task Force as well. Very good. That's excellent.
Yes.
Yeah, because, as you know, the Caribbean region seems to be a continuous target, particularly for the US and to some degree the European regulators as well. So this is FATF for those people who haven't seen it. And the high level objective is that financial systems in the broader economy are protected from the threats of money laundering and the financing of terrorism and proliferation, thereby strengthening financial sector integrity and contributing to safety and security. So this objective can only be achieved if the components are operating well together, as Natasha's just been mentioning. So this is a diagrammatic approach to try and illustrate this for you. So can you see on the left-hand side there, we've got the intermediate outcomes of policy coordination and cooperation to help mitigate money laundering and financing of terrorism risks. And then in the middle there, and you can see once again, they've adopted, the famous Basel three-pillar approach there, which I mentioned the insurance companies have as well. So the center there, proceeds of crime and funds in support of terrorism are prevented from entering the sectors or detected and reported by these sectors. And then on the right-hand side, the diagram of the scales of justice, money laundering threats are detected and disrupted. That was here, I think. And develop. So terrorist financial threats detected and disrupted. This is what we're trying to do. Theo, you had a question there? No, just a coughing fit like that.
No, sorry, just coughing. Don't worry, it's the COVID.
Yeah, that's what happened to me last week. Shocking, yeah. So these intermediate outcomes that are shown diagrammatically here, to achieve these, the FATF has identified 11 key goals that should be achieved. So hopefully on the next slide, I've got these 11 key goals. Well, it doesn't look as if I have the 11 immediate outcomes. Oh yes, here we are. Yes, I thought I'd put it in here. Do apologize if I'm stumbling along a bit on this, but we just put this together, to try and support all the other work you're doing within the Caribbean. So we're coming up to these 11 points. I hope there's 5 there. Yeah, and there's the remainder on the next page. So let's go back. So again, this is from the central body. The immediate outcomes are looking for risk policy and coordination, international cooperation, supervision, preventative measures, legal persons and arrangements, financial intelligence, money laundering investigation and prosecution, confiscation, terrorist financing investigation and prosecution, terrorist financing preventive measures and financial sanctions, and proliferation of financial sanctions. So again, if you want to read more about that, you can go onto that website reference that I gave you earlier to cross-check, what's happening, particularly with this type of risk activity in your role or prospective role as a risk manager. Now, this next slide, we looked at that last week, didn't we? We looked at the HSBC. It was breaking up a bit, but I think most of you got the thing in the end. Okay, so we'll just take like 5 minutes or so for you to just jot down a few ideas, and then we could have a short group discussion on how you see anti-money laundering model challenges within the Caribbean region, or particularly within Bahamas region, and the cost effectiveness of the type of models that you are incorporating into your systems. So I'll just mute my microphone just for 5 minutes or so, and you can put your thinking caps on.
So I guess I see your question.
Yeah, what's the main concerns?
So one of them that I know has been seen in one of our sectors, not necessarily just the banking sector, but the money transmission businesses,
Yes.
would be a matter of structuring. So,
Close it up.
so we do know that they have limits, the MTBs have limits for a particular individual being able to send funds internationally. And so what you have some people do, they would structure that money so they go one location and they send just to meet that limit for that day. So additional KYC documents and other information won't be required. And then they go to another with the intent to do the same thing, almost trying to mask what they want to send. So if the limit was say $2,500 a day that could be sent, sometimes they try to send as much as $10,000 by going to 4 different locations to get that done. And so, of course, we cited some of them asking for enhanced systems, improve your system where I don't care what location I go to, that system can flag that John Doe has already attempted or has already successfully sent XYZ amount of dollars in the event to alleviate, because you don't want to pick this up after the fact when you do reconciliation at the end of a week. You need a real-time capture of such structuring that possibly take place. So I know that's one that we have seen over time.
Yeah, so, I mean, so that raises the concern, how do these people concerned know, you know, what the limit on the transaction is?
Oh, trust me. The criminals sometimes know more than the law enforcers.
Yeah.
Be able to avoid certain things.
Yeah, we have
I have a question.
Of course.
Based on what she just explained,
Yes,
because I don't have a financial background. So it sounds like then there's a difficulty to manage this. But my question is, let's just say I'm using one entity, and these entities know that there is a limit, correct?
Yeah, they do.
Okay, so
there's
if
a limit. After you reach a certain limit, there are certain documents that you must produce that are legitimate to say the cause of it. So let me just throw out an example.
Yes,
if you have a relative that is seeking medical attention and there's a bill for $15,000, okay, once you provide that KYC information and you have all of your support and it's coming from you and going to the individual on that bill, okay, you have the information to back it up. But for someone who's just sending something to say, okay, I'm sending a gift to someone, there's a cap of $2,500. So when you exceed that, you have to produce evidence as to why more than this $2,500 needs to go where it's going. And so some don't have a legitimate reason because sometimes it's unscrupulous activity they're doing. So to try and beat the system, let me go to point A, do that. Then I'm going to go to point B, do the same thing, point C, and so by time as a reconciliation is done internally, it's too late. The money done gone at the goal.
Okay, so now I think I get it now. So let's just say I'm going to use Western Union for one transaction, then I use MoneyGram for the next. There's no sharing even of information in the background.
Not for the most part, nope.
Okay, understood.
That could be picked up at a later date, but the damage done because you sent what you needed to send. Who needed to get it more than likely has already collected it, because the minute you send that, you have like a 5-minute window and the recipient is able to go. Once you send that code, the recipient is able to go and collect the funds. So it's in hindsight that they find out what they need to find out, but we were urging them, have a system where you get real time.
Okay.
So who regulates? Okay, who's responsible for overseeing the agencies or the organizations that's offering the service, that the system meets some standard? Because you're recommending that they have a system, but anyone polices this?
Well, okay, so let me tell you, Western Union and MoneyGram is not regulated by the Central Bank of the Bahamas. However, their platforms are used by institutions that are regulated by the Central Bank of the Bahamas. So when the central bank goes in to do an examination of its entity,
Mhm.
and it sees certain things, because Western Union and MoneyGram has built-in mechanisms that they can do their cross-check and have their due diligence done.
Right.
Okay.
When the central bank goes in to do examinations of its entities, based on the system that their particular entity have, then they are cited for that. Issues are raised, they're cited, and then the recommendation is made. And we have different terms for what we call our recommendations. I'm saying recommendations, but it's actually directives. If you give a directive, that means you must do it.
Let's do it.
No ifs, no ands, no buts. We have requirements. We, the regulator, require you to do a certain thing, and we give you a time frame. And then we have another term where we have an expectation. We expect it done. Even though I don't want to use this, right? But even though we kind of water down what term we use, in essence, you still got to do it.
So is there a penalty?
Oh, yes,
Right.
ma'am. We have that administrative monetary penalty regime. And if we give you, so if a directive, because in our mind, a directive is of urgency. So if we give you a directive, usually like a 3-month period, or in some instances, immediately, whatever that directive is, it must be rectified. So if we reach that 3-month mark and that's not done, yeah, we take further steps.
Yeah, sanctions.
Penalty, that could be from a charge to a directive. That could be
To a suspension of a license.
that could be for pending revocation of your license. So it depends on the nature. Steps can get higher in terms of even going beyond just issuing you a penalty. And then when we come to our requirements, sometimes we give up to a 9-month window for a requirement, depending on what it is. So if it's policy that needs to be amended, if it's a system upgrade, because a system upgrade, in some instances, you can't do that in 3 months. Some of them range from 12 to 15 months, depending on what you need to do to that system. So we're understanding to that aspect. But if you're having a system internally, I'm not talking the Western Union, the MoneyGram, I'm talking internal system. If you have a system, if you have a customer that walks up to you and you can't capture right away and flag and say, okay, this John Doe was already at one of your locations, that's an issue.
Okay.
Right when the name is keyed in, it should show you John Doe has already done a transaction with you for the day.
Gosh.
Yeah.
That is true. It should show up. It should show up. It should be easier to detect when you're making a deposit, because anything under the threshold, I think of 10,000, anything over, the threshold of 1,000 requires a source of wealth to be, source of funds to be formed to be completed, correct?
Yes.
Yeah.
Okay.
Yes.
And it's and I could end by saying that if you go into a domestic bank, say if you go into a Scotia East Bay, and then you have to go in Scotia Thompson Boulevard, I'm telling you that teller at Thompson Boulevard can tell you, oh, you made a deposit today of $5, or you made a withdrawal today of $100. So if the banks have this in place and they're dealing with transfers and that type of thing, a money transmission business needs to have that in place, because that is a window what people are trying to use to do different types of transfers.
Yeah. Gosh.
Yeah, but just let me say, that was very good, but just to say that there's still a little loophole, because of course there are different money transfer businesses. So you go to, like you say, MoneyGram and transfer the maximum. And then you go to Western Union, transfer the maximum.
Yeah, this is why I was saying there was no sharing of information.
And you can go to another carrier, cash and go, transfer the max. So you can even exceed our daily transfer because of the not sharing of information. So while you may not be able to do it, say within Scotia or Royal or CIBC, because we have connected, you can use other institutions to do what you need to do.
Right, and I think that's why it was said that they are requiring now the other entities to have it in place as the commercial banks do, so you can mitigate it. You won't be able to eliminate it completely, but you'll be able to mitigate some of the risk that are in doing duplicate transfers and any scrupulous activities as it relates to money laundering.
Yeah.
Correct.
But it's a huge task, isn't it?
It is, because they're constantly, the global world is constantly moving the goalpost.
Yeah, yeah.
And when you think you have gotten, when you've just gotten to the point where you think, okay, I can take a sigh of relief, then and move it again.
Yeah.
And it's all cost effective because every time there's a new goalpost, cost related to it.
Yeah.
That also interferes with an entity's bottom line. So it in especially for compliance and officers, money laundering officers and risk managers, it's getting really, really
tough.
stressful.
Yeah, gosh.
Because we always have to try and stay above water.
Yeah, I mean, that's a huge challenge, as you say, when using multi terminals and what have you, how you can, if you're a very large bank, as you were saying, where you've got all the connectivity, where the teller can see instantly that you've just been in to Bay Street or whatever and made a transaction. I mean, that's fantastic. But as you were discussing, for some of the other organizations, they just don't have that software systems in place, do they?
Not currently, but most are working to have that resolved.
Excellent. Thanks. So that's the central bank point again. Excellent. Yeah, but it's a huge problem, and I mean, these people, they're very clever, aren't they? You know, they find all sorts of ways to manipulate. You know, I've seen a huge investment fund set up where the investments were all of a fraudulent nature, hot money coming in, dirty money coming in, and then when it got all put together collectively, they bought another investment which was meant to show the money, you know, was clean. And the investment actually was in a financial institution. So, I mean, goodness me, you know, that's a really, really tough call on that. Okay, well, let's move on just from that section, but you do have very active movements going on there as before. So let me see now then. How do I get on to the next section? Do I have to stop the share, Miguel? Probably. Yeah, let's see. Here it is. Oh, can you see this Barclays document on the screen?
Yes.
Great.
Very clear.
Okay, that's good. Okay, now with, you know, rather than me looking for all the other PowerPoints, but you remember that diagrammatic chart in blue where we had the pillar 1 on the left, the mathematics, pillar 2 in the middle, you know, looking at supervision and risk management, etc. And then on the right-hand side, tucked up at the top corner, it was the board of directors' responsibility for disclosure. Now, when you see this here, can you see at the top it says Barclays extract? So this is extract I made from Barclays Pillar 3 report of 2017. Now, if you want to see the full report sometime, if you email in to Miguel, and then I'll send you a copy of the full report, or you can get it from Barclays annual report and accounts from their website. But when you see the Pillar 3 report in full, you need to take a deep breath because it's well over 100 pages of disclosure on the things they're doing in terms of risk management. So what I've done is extracted rather, these pages. So on the bottom right-hand side there, that's page 121. You should have 122, 123, and 124, And then 125, yeah, that's it, that's it. So these are the main pages which talk about the Barclays approach to managing risks. So this is their risk management strategy, and linking into that governance and risk culture. So let me just outline what's in there, and then we'll start to work on this as a case study. So in this section, we describe the approaches and strategies for managing risks at Barclays, which is a huge bank, as you know. It contains information on how risk management functions are organized, how they maintain their independence, which is very important, as we've seen before, and how they foster a sound risk culture throughout the organization. So that first page that follows, page 122, you can see is they have what they call an enterprise risk management framework, which is really good news, because we've had this enterprise-wide risk management for a number of years, and it's good to see Barclays has a framework based on enterprise risk management. So we'll be able to study that in a moment. Sets out tools, techniques, and organizational arrangements to enable all material risks to be identified and understood. So, I mean, that's a very bold system, very bold statement, all material risks. And then on page 122 to 124, we see the governance structure. And this will be interesting to look actually at how many committees they have, where is the risk section fitting in to the various committees, and looking at the number of committees, because the number of committees in financial organizations varies dramatically. Some organizations will have more than 10 working committees, and then others will have quite a small number. In my personal view, too many committees is a bad thing, because it detracts from managing the business, because people are constantly attending all these different committees, and then one committee is reporting into another one and into another one, etc., etc. So we look at the Barclays approach on this and how these committees support the continued application of the enterprise risk management framework. So this is all linking into the framework document. Then on page 125, discussion of how Barclays risk management strategy is designed to foster a stronger risk culture. So that would be interesting to look at. And then 126 to 128, which we don't have in this section, but you could look at this later if you want. That describes the group-wide risk management tools that support the risk management. Okay, so what I'd like you to do is take a look at this. There's the enterprise risk management framework there. Talks about principal risks, how they separate the risks there. So it's quite interesting, separating risks into financials and non-financials. And it talks, as we discussed briefly before, about risk appetite. And then it talks about roles and responsibilities in the management of risk. And when you read this, you might find some slight differences to maybe what your expectation would be. So they talk about 3 lines of defense there, and you can see who's involved in that. And then they talk about the risk management strategy, governance, and culture, and it talks about the risk committees. And then the various committees are described there. And here's a diagrammatic chart at the bottom of 1, 2, 3, setting out the number of committees there and where the group risk committee fits in. So that's worth taking a good look at. And then this page, I've never seen this before, but this sets out specifically what the roles and responsibilities are for the management of risk and looking at senior management to begin with. So they have, look at the group chief executive officer, you've got the group chief risk officer, and then you've got the chief compliance officer, controls officer over there, and you've got senior managers regime. So again, worth looking at. And then on the next page, something very, very interesting, where they actually disclose and talk about in this document, which is publicly available within their annual report and accounts, learning from the mistakes. Now that's quite unusual, again, in my experience, because quite often people tend to, sweep the mistakes that maybe they've made. The expression we would use would be under the carpet. So then look at value-based conduct culture. Okay, so we're now standing at 10 minutes to the hour. So I'll give you say 10, 15 minutes, probably 15 minutes. So we'll reconvene verbally at 5 minutes past the hour. Thanks. So everybody's got that document, I hope? Good.
Yes.
Yeah.
Yes, thank you.
Okay. So take a bit of time reading it through, highlighting things that catch your eye, and then we'll have a discussion in 15 minutes time about this document.
Okay, we're good?
I can't get back in. Can you hear me?
Yeah, we can hear you good. Sorry, we're good. You're
Yeah,
good.
but I can't get into the meeting properly.
No, but you're in. We can see you and hear you. You will see us?
No, I can only see you.
Click on participants down at the bottom.
Yeah, that's not showing. There's nothing showing except you.
Good day, ladies. Can you see me? Can you see Mr. Here, Mr. Checkley?
Yes, I can see
Yes.
both of you. I can see everybody.
Yes, see, I hear him.
Okay.
Okay,
Yes.
okay, I can see you now. Did you get my message, Miguel, about the risk management press clippings?
Yes, I sent it to you and everybody else just now.
Yeah, but no, I need you to put it on the screen.
Oh, you need me to share?
Yeah, not at the moment, but after we've looked at this Barclays thing.
Okay.
But I can't get the Barclays thing on the screen. So can you get it on yours?
That's not a problem.
So should I stop my screen share?
Yeah, stop your screen. Hold on 1 second here. Let me pull up. Let me look for the Barclays.
It's the one you mailed out, yeah?
Okay.
That's it, yeah, great.
So, sorry, which page you're at?
Well, we're going to start on the first page, yeah?
Okay.
Yeah, the page after that. Okay, stop. Okay, can you alter the size of this so we can see that page?
It's too small?
No, it's too big.
Oh.
This is going to be difficult. How can I get this back on my computer? How can I get control of this? Sorry.
If
Ladies.
I make you the host, could you? I don't know.
Try that then.
If I make you the host, I'll make you the host.
Yeah.
And see if you can control it.
Go on then.
Yes.
No.
You can't control it.
No. Sorry, ladies, we got this technical problem here. We had 2 weeks without any hitch, and we're into the risk management now. Anyway, who wants to start us off about this first page about Barclays, how they're setting out the ERM framework?
I could go, Mr. Checkley.
Mm-hmm.
Well, I like the opening statement by Barclays. They disclose that, risk taking happens every day.
Yes.
Throughout the business. So that goes to say that this daily risk management is something that, doesn't put a halt to, but it's something that occurs almost every day.
Yes.
The enterprise risk management framework, it basically talks about the guidelines for that, the principal risk. Mm-hmm. It identifies the 3 lines of defense. And that's the same thing we have in the financial organizations here. So everyone plays a part. It's just identifying which line of defense you would fall in. Correct. So we have those persons dealing directly with, like, for example, tellers. Those persons on the front line. Yes. They would fall within the first line of defense. Right. Our second line of defense, for example, in banks would be like our compliance teams. Yeah. And then our third line of defense, which is expected to be the last line, would be audit, where they should be able to pick up if there was any kind of miss by the first or second. It should be picked up by them as well.
Yeah, that's very good. So that's very, very similar to what Barclays are showing us here.
Yeah. So this is something we look at. Well, you only wanted me to talk about this first page, right?
Yeah, just for the moment. So Miguel, can you push it up a bit so we can see the bottom of this first page, the 2 charts?
Okay.
Okay, stop. It's gone too far. No, we wanted the chart at the bottom.
Scroll down, right. Miguel. Come down a little more.
Classification of the risk, financial and non-financial.
That's it.
Okay,
Right
right
there.
there, Miguel.
Right there. Yeah.
Yeah, so here it talks about those risks, those financial risk and non-financial risk.
Yeah.
Credit risk, we all know what that is.
Yeah.
In the event that a customer is unable to pay a loan we would have given them, we run a risk on possibly never receiving what we would have given out.
Yes.
Market risk, liquidity risk, and something we're very much in now with liquidity risk, with what we're going on with coronavirus. That's a almost daily thing I hear in my conference calls. Capital risk, the interest rate risk in the banking book.
Sorry, Andia. Hi, did you give an example of what your market risk would have been?
Oh, no. So
okay, no, I just want to know if I missed it. Sorry. No, you can go on. I just want to know if I missed it.
Okay.
Well,
all right.
and Dia, sorry, let me just say, do you want an example of market risk?
It would be
Can
it would be
anyone
nice.
Yeah, can
Yeah,
anyone
well,
on the
the
line
market risk from my understanding would be the sector or the segment that you're in and how, for example, this coronavirus would affect that sector or that segment.
Okay.
So if you're in the banking sector, the coronavirus may have affect the bottom line in terms of lending. You know, people are not able to go into the bank to borrow or whatever. So it depends on the sector. As you can see from the news, from the global news, it has really affected the oil sector, the oil and energy.
Yes.
So that sector risk.
Yeah. So commodity
Sorry,
prices.
Andy, for butting in.
Yeah.
No, that's fine. No problem. I love the additional input. And also
definitely.
here too, they talk about the credit spreads, and in banking where we have our interest rate, like right now we're still running a risk on if we'd be able to get that additional profit we would have earned, because things are just so volatile right now. So that's a prime example that's happening daily now.
Yeah, and a good example is Cassandra was saying on market risk, you can see commodity prices, and that's what you mentioned, the oil prices have collapsed totally, and of course that's going to have a huge impact on Trinidad and Tobago, because to the best of my knowledge they're the only Caribbean island that has offshore oil discovered there more than 10 years ago. So a lot of the foundation of the economy in Trinidad is on oil and petroleum based products. So that's going to be a big problem for them, because they don't have much of a tourism sector in Trinidad. Yeah, very good. Well done. And then, of course, Miguel, as we have within this program, the whole module on market risk, don't we? Which module?
Yes, I think module 2 is credit and operational risk.
Yeah. Module 4 is market risk.
That's it. Thank you. Yeah, market risk covered in detail in module 4. Now, on the non-financial risks, and if you want to continue on that, what did you think of that classification?
Well, definitely the operational risk. I mean, we talk about that almost every day because there's really no cost to it. That is really an open book in terms of one bad human error or other could really be a big operational risk. And so that forms a fundamental part of our risk management in the bank. Like right now with some of our branches not operating and only a few open, we still run a risk of not being able to operate like how we normally would. And so we're still having persons do things from home to make sure that the bank is still covered. And so that's the one that we almost talk about every day, the operational risk involved.
And in module 2, when I do credit and operational risk with you, you'll see the Basel Committee's definition of operational risk fits almost exactly with what Barclays has got there.
Yeah, and then another example, Mr. Checkley, was when we had like Hurricane Dorian and we had those branches that were exposed, right? And so you had persons trying to break into the bank to get the ATMs. And so it caused us to look at, what could we have done differently just in terms of protecting the bank and overall our customers. And then we have the conduct risk. The model risk here is saying the risk of the potential adverse consequences from financial assessments. So sometimes we have to look at, are we using the correct model to manage the risk?
Yes.
Conduct risk, we have our employees do annual attestation on that, just to make sure that everybody is complying with proper conducts.
Yes.
To help and manage that risk. Reputational risk is a big factor as well. We know that could actually put us in the hole. And I know I heard early on this call about possibly if you don't follow recommendations made by the central bank, having your license revoked. And so reputational risk is something we manage on a daily basis, and that's straight across the board. And then legal risk.
Some people say reputational risk is the biggest risk.
The biggest one,
Because
I personally feel so as well.
Okay, I have a question. I'm not sure who was speaking just now on the reputational risk. She said they manage that on a daily basis. What are some ways? Who's that?
Andia.
Okay, Andia, sorry. What are some ways your organization manage their reputational risk?
Well, a prime one is the way how we handle our customers. So for example, making sure that all of our messaging is aligned.
Oh, sorry, where do you work again?
Scotia.
Okay, go ahead.
Yeah, so just making sure that we making sure that
and do you heard how she said that?
Yes.
Hey, and I hope you heard how she said that.
I don't know. That was good or bad.
That's my buying, so I'm quite interested to know.
Yes.
I am sort of done. Okay, what's happening here is I've sort of done a lot of bank hopping. And Scotia was my introductory bank. And my relationship with them kind of left a bad taste in my mouth. And I'm looking at the two Canadian banks, both Scotia and Royal. Did that to me, Royal. I had a big loss with some people in Nicaragua, I think, getting into my account. And so I came home to the Bahamian Bank. But I'd like to hear how Scotia manages their reputational risk.
Okay, well, I could give you an example because I think that's what you asked. And so I worked at RBC for 12 years. And so I've been at Scotia for 2. So as it relates to reputational risk, the way how we handle customer transactions, how we communicate with customers, we're always mindful of the fact that, if it comes back today or tomorrow, did we do the right thing? And so we try to make sure messaging is aligned across the branches, that we give customers accurate information. And so I'll give you a live example. Right now, Scotia is offering what we call a customer assistance program relative to the COVID-19 cap. And so what we've been doing every day is making sure that in that communication to the customers, everything is transparent. We advise the clients what they're signing up for, what all is entailed, so they can make sound financial decisions. Not that we're throwing a program on them, but it's something that they can benefit from. Yeah, so that's just an example, but reputational risk, I mean, I can tell you that comes up almost every day, right? Because you have customer complaints, but I mean, the fact that the customer takes an opportunity to write an email to you is a good thing. Now, what you have to do is when you respond, just make sure that at the end of the day, you're helping to resolve the customer situation and putting the customer in a better financial position.
Okay.
Very good. Yeah, well said, Andia. That was very, very explicit. That's really good.
Sorry, I just would like to say, because even on the reputational risk side, as it relates to the offshore entity, that is huge as well. Because I remember at a particular offshore bank that I was working to, they had a serious security breach and actually got their license suspended. And because of that, investors started to, they got wind of it because it was a huge international bank, and they actually started to withdraw all of their funding. So reputational risk, I think, is key amongst all of them. If you've lost your reputation in the international arena, you've lost everything. And once the license have been even suspended, not even to go as far as revoked, but as long as your license has been suspended, clients get a little they get timid, and they decide that they quickly want to pull their money out, which is in itself a big loss for the company, because at the end of the day, it's all about the bottom line. Reputational
Agreed.
is
Agreed.
huge
Mm.
as it relates to all of the risks that we have to deal with in the financial industry.
And reputational
Really,
risk, things spread like wildfire, don't they? I mean, we looked at the Northern Rock briefly, where I showed you the graphical illustration of their huge growth. But what I didn't show you was a picture from the press where, for the first time, in many, many years in the UK, there were queues of customers outside of the Northern Rock branches, with people waiting to get in to withdraw their money because of that reputational aspect that we're talking about, how they had to seek financial assistance from the Bank of England and the government. And of course, as you said, people talk very much, and this caused a run on the bank. Okay, thank you. Anyone else want to add on that separation? I thought the model risk, yeah.
Let's not forget AML-CFT, inclusive, being a part of that reputational risk, because
Yes.
even as jurisdiction, if other jurisdictions around the world see you as a hub for unscrupulous activity or illicit funds being able to enter or leave your jurisdiction, they won't look at you favorably and want to even have a relationship with you. So AML-CFT as well.
Yes, location
true.
risk.
Yeah,
Location
geographical.
Yeah, geographical, yeah.
I guess what we need to look at overall is that the non-financial principal risk can also be equated to loss, tremendous loss for the industry in its entirety, because the operational risk can lead to substantial financial loss for the actual entity, as well as, like you're talking about the Northern Rock financial, the reputational loss can lead to you actually losing the license, and too big to fail comes back into that effect, because if you start losing your major players, then it can actually have a great effect on your total industry.
Yes, that is
Definitely.
true.
Yeah, definitely agree. And we looked at that Barings Bank case and look at the effect on their reputation. I mean, the bank ceased to exist. The bank was over 200 years old. And thanks to what happened, within Singapore, Barings Bank failed in the end. Miguel, can you move us on to the next page, please? I think he's disappeared now. Miguel, are you there, please? Can you move us on? There he is.
Sorry about that, folks. You need me to scroll down?
Yes, please.
All right, sorry about that.
Okay. Can you minimize it just slightly so we can try and get the whole page in? On the screen, can you just minimize the PDF slightly so we can get it on the screen?
Sorry, Mr. Jeff, as you were saying?
Can you minimize it so we can see the whole page on the screen?
Sorry about that.
Probably not. No, it's too small.
It's too small now? Okay, let me.
Yeah.
Okay.
Okay, well, we'll just have to pick it in bits, so you'll have to stay at your desk if you would.
No problem, no problem.
Okay, so who wants to start us on this concept of the risk committees? So if you just go down to the chart at the bottom of the page, Miguel. Yeah, that's it, stop. Okay, any comments to begin with on the actual number of committees in this huge international bank employing over 100,000 staff globally, and also the actual construction of the committees? Anyone, any comments on this chart? Who'd like to start us off this time?
I think given the size of the institution,
Yes,
is necessary, and the number of boards is necessary. I think the committees are about right.
Mm-hmm.
I was looking for the remuneration committee because I remember the case.
That's the case. Yeah.
I remember the case in the United States. I can't remember the company where the guy was making so much money and he wheeled and deal. I can't remember that case right off my head, but the remuneration committee is very important. I think this is an app board. I think so.
So in my experience, to have these 4 major committees only is quite unusual, because the organizations I've looked at and organizations that are much, much smaller than this group, global group employing over 100,000 people, to have this number of committees, it looks very, very minimal. That was my first impression. Anyone else surprised by that or not?
I think, just expand upon that. I think for me, with, I would say 4 committees. It depends on, well, I didn't see like any subcommittee except for the remuneration panel.
Yeah.
It depends on how effective they are. It doesn't make any sense having 10 committees if they're not good. So maybe they're just being more effective in the way they streamline the committees.
Yes, well, it's a very good comment, because if you'd looked at Barclays accounts 4 or 5 years earlier, you would see they had more than 10 committees. So they drastically reduced this down to try and make it a more effective structure. So the more committees you have doesn't necessarily mean you're going to manage the business in a more effective way. And here's a good example.
Precisely.
Yeah, and look at the group risk committee there. So we've got business risk committees reporting into group risk. And that's what we talked about when we first met, about trying to get these risk events coordinated and upstreaming them into the various controllers, which you can see here. And then group risk committee reporting into the board risk committee. Now that, you can see, is independent of a business generation function, which is very important, as we've discussed before, to maintain their independence of risk reporting is very, very important there. Okay, now Miguel, if you move on the same page, but move upwards so we can just see for a moment. And the board, yeah, stop there, that's great. So the board on the left-hand side there. So one of the board's responsibilities is the approval of the risk appetite, which we're going to see in a moment. Oh no, we're not, because we're not looking at page 126. But the group CRO will be presenting a report summarizing developments in the environment and performance trends in key portfolios. So the CRO, if you remember, is the Chief Risk Officer. So the board is also responsible for the enterprise risk management framework, and it oversees the management of the most significant risks through regular review of risk exposures. Responsibilities of management with respect to the board forums, including reporting of risk information, are set out in the ERM. So again, good example of the tone, being set from the top by the directors. Okay, now on this page, anyone spot anything else that they thought was very useful or quite unusual on the same page? No other comments on there. Let's move to the next page. Oops, sorry.
I have one comment, Mr. Beckley. Just looking at it now, perhaps the risk committee and the reputational committee maybe be one committee? In essence.
Say that again?
Perhaps could the risk committee and the reputation committee maybe be one committee? Because at the end of the day, it is protecting the reputation of the bank.
Well, they could be merged, but It just shows how much they're placing on the
How much-
important areas we discussed earlier of reputational risk. So they actually have a board committee that looks at managing the reputation of Barclays, which would be a huge job. You know, they've got thousands of branches, over 100,000 staff, and they're in all these different locations. Someone else had something to add on that.
Yeah, that was me. I
Yeah,
was saying,
thanks. Mhm.
initially you would think that those two could be one, but
Yes,
then it
but
depends on the institution and what they're focused on.
yes,
And so you would separate the reputation if you have to heavily focus on your company's reputation with the understanding that that starts it all. And
yes.
if you don't have a good reputation, then you really don't have that much business. And so
Mhm.
you would want to have a separate committee that focuses on reputation itself.
Mhm.
Okay, thanks.
Yeah, thank you. Thanks. Okay, let's move to the next page then. So Miguel, can you take us to the next page, please? Miguel, are you there? Can you take us to the next page, please? Thank you. Okay, now I found this page quite fascinating, as I said earlier, because I've not seen this set out in so much detail. So it's a good chance for us to look at these different positions and what their roles and responsibilities are in the management of risk. So anyone got a comment on this page?
No, but I would say that this layout and the roles and responsibilities is similar to the organization that currently working in. So it's very similar.
Who's speaking now, because your image hasn't flashed up?
This is Shalene.
All right, thank you. Thank you. So what about the role of the Chief Risk Officer? If Miguel can move the page up slightly so we can see the Chief Risk Officer. Yeah, we're coming, yeah. Bit further up. Okay, stop there, yeah. So this is very important, you know, because we've been talking about this a lot during Module 1. And we did talk about how senior a person should be who is the risk manager. So you can see in Barclays, they have a group Chief Risk Officer who leads the risk function across all Barclays. So his responsibilities, or her responsibilities, include developing and maintaining the enterprise risk management framework and clearly articulating risk culture objectives. Now I'd highlight that because you'll see a little bit later that this risk culture is very much at the forefront of Barclays' strategy and developing towards this reputational risk aspect. So preparing and recommending group's risk appetite to the board's risk committee, frameworks, risk management, providing accurate, transparent, and timely reporting of the actual risk profile of the group relative to the set risk appetite of the board. So that's a very important thing to do. Defining the risk taxonomy, that's the principal risks, and updating it as needed so that it remains relevant and comprehensive, and bring a risk perspective to compensation decisions. Now, I think you should highlight that one because in my experience, that's absolutely unbelievably difficult to try and start rewarding people, you know, for managing the risk in a better way, because we all know bonuses tend to be, you know, on business related functions, not on risk management functions. And reporting to all the relevant stakeholders on Barclays' risk positions, adherence to risk appetite and enterprise-wide risk and controls. Now, again, that's a very important statement because they're not saying reporting to all the relevant shareholders. And if you remember, you know, from corporate literature, quite a number of years ago, it was all about shareholder value. But now we don't talk so much about that. We talk about stakeholders, because the stakeholders in the business are much wider than the shareholders, because people like yourselves working in the institution, you know, you're actually a stakeholder, even if you don't actually have shares, you know, you're a stakeholder in the success of the business by the way you're performing. So I thought that was an interesting statement there. Now, we've talked a lot about compliance, so if Miguel can come down a bit so we can see the Chief Compliance Officer. No, sorry, the other way. You see the Compliance Officer at the top. There we go. Any comments on this bit, on compliance?
To me, it would be, I think it'll be ideal if, as the Chief Risk Officer is looking at risk appetite.
Yes.
They would also be in sync and speak with the compliance officer to work together to ensure that all areas of the operation are covered.
Yes. Yes, and on the final point there, which you can just see at the bottom of the screen, using mandate to access any part of the organization and any information bringing to the attention of line and senior management or the board as appropriate, any situation that is of concern from a conduct or reputational risk management perspective that could materially violate the approved risk appetite guidelines. So that's picking up on your point there, right at the bottom position there. Okay, controls officers next. And then we've got the senior managers regime. Let's move up to the senior managers regime. Okay, stop there. Okay, now, anyone, any comments on these 4 specific rules of conduct falling out, you know, from the senior manager's functions? That part quite straightforward. Cassandra, you had something to say on that? No. Okay, so on to the final page then of this section. I found this page very interesting in the frameworks, policies, and standards, and then this section on learning from our mistakes. So, anyone, any comments on that?
I thought that was interesting, Mr. Checkley, because I mean, as best as we try to cover everything, I think we will encounter some things that, you know, we could learn from.
Yes.
And so the bank here is basically acknowledging that, you know, where these mistakes do happen, they have formed this committee, what they call the group lessons learned process, to help in closing those gaps. So they're acknowledging that if it does occur, that this committee will help them to close off whatever gaps may arise there. And I know this happens too, because, you know, even if we have the central bank come in and do a review, for some banks, like earlier, like what they mentioned about recommendations, they would recommend to you, well, okay, you need to strengthen this particular area. So, you know, we would then take that and create an action plan so that once the central bank comes back in again and do their visit, this particular issue would have been fixed. And so I think this is straight across all the banks. We know everything won't be perfect, but we do have a strategy in place to address it.
Yep, yep. Very good, Andy. Anyone else, any comment on that section? Learning from your mistakes? So where would you see this fitting in terms of the risk register that we've been talking about? So this should be linked in, shouldn't it, to the risk register, because the risk register is going to help us pick up these internal and external risk events. It's mentioned there. Now I know I'm sharing Miguel's screen, so I don't know if you can see my my mouse moving around there. So lessons learned in response to
No,
internal.
okay.
You can't. Yeah. Okay. Stop for a second, Miguel. So learning from mistakes is one paragraph. Then there's a second paragraph. So group lessons learned process, setting out requirements for the completion of lessons learned in response, just a bit further up, Miguel. Oh, you missed it again. In response to internal and external risk events. So this is building up on the events that we'd see in our risk register. So from a central bank perspective, have you seen this in operation at some of the financial institutions in Bahamas where they have a learning from our mistakes section?
They don't necessarily have one in place per se.
Mhm.
However, what we do from time to time when things occur,
Yes.
and of course it impacts us whether nationally or internationally, we request. So let me give you an example how we experienced Hurricane Dorian September 2019.
Yes.
We reached out to the financial services sector, to our entities who we regulate. And from the onset, we asked about how the impact of the hurricane, what impact the hurricane had on them, whether it be their staff, whether it be customers, or whether it be their premises. And what we requested, which was due to us early this year, was lessons learned. So we discovered that some were non-insured, some were underinsured, and they learned that because some of them had dropped the ball, and I'm speaking generally, because I can't, I'm speaking generally. Some had dropped the ball in terms of the follow-up internally to ensure that homeowners insurance were covered, and some had dropped the ball if modifications were made to those homes. So the same value that they had it insured 10 years ago, modifications happen, and we don't know, land usually appreciates. And so you can't have the same value attached for a prolonged period of time. So we would usually reach out when certain things happen and ask what lessons would be learned. And the same thing with this coronavirus. I would imagine once we would have gotten somewhat past this point and coming back to some state of normalcy, we'll reach out again, even though we've already had preliminary talks with the industry, just to see where they're at. More specifics will be provided at a later time as to lessons learned and going forward, what you can do. And that brings me back to, as well, the business continuity. Some of them did not have that updated. And so with that not being updated, it was almost like a scrambling to do this, do that, one story and pass through. And so, okay, that was a lesson. We must continue to update, do those T3 calls, the test calls, and just test your systems, remote systems, test them on the weekends, on a holiday, just to see that they're up and running, to make sure in the event if something happens, you can sustain, you can survive, you can operate, whether it be remotely or otherwise. So we reach out. To answer your question, we usually reach out and ask for lessons learned based on when certain things happen.
Yeah, that's excellent. That's excellent. Thank you very much once again. So do most of the organizations actually have a business continuity plan?
They're supposed to.
That's basically mandatory. We have that now where that's basically mandatory. You must have that in place. If we come and pay you a visit, an on-site visit, whether it's a arranged one or a surprise one, if we come and you don't have one, you're going to be required to complete one.
Right.
And it must be board approved.
Excellent. Yeah, that's very, very important. As we've seen this time, I mean, Miguel, at the Institute, that's a good example, you know, how they've had to change the model from most of you people normally would be getting together in the BIF's office. And we
I have a question on the the lessons learned.
Right. Good.
When you request your entities to submit to you the lessons learned, what they have experienced, let's say you gave the example of Dorian, what all did they learn from it? Are they required also to say, going forward, how they intend to rectify the situation that created the issue?
Indeed. So they do an analysis internally, and how can we mitigate from these certain risks occurring again due to this natural disaster or due to this epidemic that we're currently in. So yes, they have to tell us. We ask them to tell us, how are you going to avoid such reoccurrences? And the example that I gave was in terms of some insurance coverages. So
Right.
just how said that they admitted some, we dropped the ball and we weren't following up the way that we should have been following up to ensure that either the property was insured or overinsured. Going forward, we have a team in place now who's going to follow up on an annual basis. We'll have it set in our system when John Doe's mortgage expires, and say 30 days prior to that expiration date, we'll follow up with John Doe. If John Doe isn't financially able to pay that himself, we will pay that and add that onto his loan. So some of them have,
I know they do that. Okay.
Some have taken on a strong stance that they can't be in the same situation again. And Dorian was definitely a lesson learned.
Indeed.
Yeah. So yeah, we do ask for that, and all that is included, as well as financial loss, as well as the NPLs on the book. How are those non-performing loans looking? Is it non-performers prior to Dorian, or these are non-performers after? How are structured loans looking? And yeah, so it's a whole lot of information, but I just summed it up as generally lessons learned.
Okay.
Yeah, thank you. That was very
informative. Thank you.
Yeah, very informative. Yeah, very informative. Yes, so the next point would be just at the bottom of the page there. You can see the other risk culture drivers and management and governance right at the top there. This means a consistent tone from the top and clear responsibilities to enable identification and challenge. Motivation and incentives, the right behaviors are rewarded and modeled. Competence and effectiveness, and then integrity. Colleagues are willing to meet their risk management responsibilities. Colleagues escalate issues on a timely basis. Now that came in earlier in this paper from Barclays, where they were talking about escalate, I mean, putting forward any potential problems up to superior levels of risk management. Okay, that's about as far as we can get on this at the moment. I'm slightly hampered by not having control of that document there, but if you read through it again, and if you've got any questions on that, we can pick them up as we start on module 2, which brings us into May the 9th on Saturday, Miguel. And that'll be credit and operational risk. So plenty of things to have a deep look at there in terms of credit risk management. And then operational risk, as we said earlier, is proven over the last few years the most difficult risk to actually manage. So thank you very much for giving up your Saturday morning again. And see you all next week, and hopefully the technology will be slightly better next week, as it was before.
Okay, ladies, does everybody have module 2?
No.
No way. All right, I'll follow up today.
Thank you.
Thank you.
And can you send me a copy as well, Miguel? So we're
Not a problem.
Yeah.
Thank you.
Thanks for your support,
Have a
Miguel.
good day.
All right. Thank you. Stay safe,
Right,
everybody.
thanks.
Yeah, stay safe.
Okay, thanks everyone. Bye.
Bye.
Thank you. Bye. Thanks, Miguel.
All right.
Okay, maybe you could have mentioned our new program at the end there, but we didn't have a chance really. Maybe it's too early.
That's true.
So is Bodie still hanging on to it until you get the chamber approval?
Oh, well, yeah, the chamber, I spoke to the chamber. We'll go ahead. We're going to be good ahead with the business one. So, yeah, so we'll be sending that out on Monday.
Okay, now there's just one point I noticed on the latest one you sent me, the bankers one. Can you put it on the screen just a second? Have you got time?
Yeah, no problem.
Uh-huh. It's just on the front page.
Hold on one second. Business recovery, C virus, bankers. Yeah. Okay. Hold on one second.
Yeah, I think your new big mic, it's probably an Omni one. So you're getting directional input from the back, from things like your fan at the back there. And yeah, I know. Because I found my old one that I used to tour around with, years ago, and I got it out. And can you see it? Look, it's very similar to yours on a little stand. But on the back, there's a switch where you can control it so it only picks up direction from the front. Otherwise, you get all the background noise coming in.
I only have 1, 2, 3 on the back of mine.
All right. You have 3.
This is a very old one.
3 positions.
Yeah.
You have 1, 2, 3. Yeah, mine's the same. Yeah, it's got one.
It's a straight 1 to 1, eh?
Yeah, it's got 1, 2, and 3. But because this is so old and I've had it in my case for years and years, my Technic case, I don't know what 1, 2, or 3 is, but there's one of them is just directional sound from your mouth. But the other 2 you can pick up from the back, from the speakers as well. Just something. Anyway. Okay, that was just an aside. Did you find the brochure? That's it. Yeah, that's it. Now.
I didn't change it. Say no.
No. When you sent me, you sent me something a few days ago by email. But what was missing off the front page? It didn't say Business Recovery - a Banker's Guide. It just showed a Banker's Guide to Risk Management. I don't know how that could have happened.
So this wasn't showing?
No, a Banker's Guide to Risk Management was showing.
But not Business Recovery.
But it didn't say Business Recovery. So I meant to tell you at the time, but I didn't get a chance. Just seeing if I can find it on my phone.
He just gets his emails on his phone, not on his laptop now.
Well, because I'm on my laptop to you at the moment, don't I?
You can't read emails off a phone.
No, of course I can. I'm saying I'm looking on here because I'm on the computer to you. You got it or not? No. So when do you think this will start going out?
I already sent this out.
You've had no response at all?
No, not one. Unbelievable. I even personally emailed this to my counsel, my DCJ. Anyway, I can double check. I have this. This is going out. This is scheduled to go out again on Tuesday morning.
Yeah, there you go. Look, that's the one that you sent. And look, it just says a banker's guide, right?
The risk management. All right.
Yes. So people might have looked at it and thought, well, this is just a risk manager, and we've already got certified international risk manager.
Oh, you mean the email one? Oh, that's what you're looking at.
Yeah, it's just one that you send out, from Constant.
Constant, yes, but what?
Let me tell you the date that you sent it.
Yeah, but you don't have.
Tuesday came out.
Man, I had to put that in the email title though.
Tuesday.
The subject. No way.
No, you've just got a banker's guide to risk management. Can you see it?
I see it.
Yeah.
All right, I'll fix it for the next outtake.
Yeah, sure. Okay, just one final point. So this is not like a complaints section, but the when Tiffany registered, can you see on the bottom of Tiffany's registration, can you see the pricing there that you put on? It says members fee 2762 spot 50. Whereas when you look on your website, it doesn't show that figure.
Wait, hold on.
You go into biffsedu.com and then look at all your courses that's listed there and have a look for Cred Skills Academy. Yeah.
Let me see. No problem. Let me see. Hold on 1 second, yeah, because
that's the page with all the blue things advertising all your courses.
My day came from bad to voice.
No. It's
I'll pull me like. Yes, we'll correct it. Let's see. I was doing it. Oh God, this ain't open now.
Yeah.
Hold on, let me use AIFS. Yeah, let me fix that.
biffsedu.com.
I was working on this website all week last week. Okay, programs.
Yeah. Programs, yeah.
I switched that whole page up.
Yeah, and then scroll right down until you find the Cred Skills Academy, and you'll find the prices are different on your website to what they are on your registration form.
Okay, I get my two businesses. I get my certification, advanced foundation. I get $2,500 down to the bottom here, $2,950 and $150.
Right. Now, when you look at the advanced one.
Oh my God, the advanced one is the same price?
Well, that's what I'm saying. And then on here.
No, the advanced one is $2,950, $3,250.
Yeah, and then on here, it's a different, where Tiffany's done the registration, it's a different price again, look.
Oh, Jesus, where the hell is she getting that one from, man? That's an old registration.
But she got it from you. Where else could she get it from? Yeah.
Well, you got to honor it. What is $200 less, eh?
And then she signed it and sent it back to you. That was it, look. All signed and everything.
So that's $200 and something less then.
Well, I just don't know where we are now, but I mean, what happened was you saw my email to her and to Lorraine, and I did what you said, I halved it, and that came to 1456 spot 25.
Oh, God.
Yeah, I know. But anyway, it's done now, so. But the
where
good
the
news.
hell did that registration form come from? Hold on, let me click this on.
Yeah, and then the other thing on the new registration, you can see, for example, Lorraine.
No, I have this. It's wrong on the old one. It's wrong on the new one.
Yeah, there's the new one. Look, but the problem with the new one, as Keith Dickinson's pointed out, we don't even know what their job is. You know, whereas on the old form, you had length of service.
Oh, so they need a job. They need a job title or description of their job.
And current position.
Okay.
And and academic qualifications. So straight away we could see with Tiffany, oh, she's been in 11 years. She's a branch manager, so she's senior. Oh, and she's got a master's. She's got a bachelor's degree, and she's got an associate degree, and she's got a master's degree. So when he develops her personal study plan, he knows that he's got to have, a faster entry point. Now, when Renee, how do you pronounce her name?
Actually, it's Renee.
Renee.
It is pronounced Renee, yeah.
Yeah, well, when Renee's done it, we haven't got a clue about it. Can you see? That's all you got. So when you said you didn't understand, all I was meaning was we just need, like, what the current position is. Sorry
about that. I will fix that on the phone.
Please. So that would be very helpful. So anyway, that's all the bad news. But the good news is the money from Tiffany's come through, the initial payment. Does Renee know that it could be paid in 2 installments because she hasn't said anything yet? Or aren't we kind of advertising that?
No, let me hold on. Let me put up my email with Renee. God have mercy on. I need. What is Renee? Renee is doing fundamentals, right? Oh God.
Yeah, yeah.
And Lorraine is doing advanced.
Advanced. Now Lorraine, she emailed as you'd see to, and she attached a payment form from the bank. But guess what? The account number's got 2 digits missing at the end. So I've emailed her to say, nothing's come through. It might be because these 2 numbers are missing from the bank account details on the transfer. But I'll check again on Monday and let her know. Yeah.
So they did send you the money. Oh, hold on, because I get another class. So, hey. Okay, you start at 12:30, right? Yeah. Okay. Yeah. Yeah. So hold on, give me a second. I still. Yeah, I have the list. You gotta give me about 10 minutes because I have another class. All right. Bye. Yeah. No problem. All right.
Anyway, don't worry. Good news is Tiffany's money came in. I just checked the bank today. But as I say, Lorraine, I'm not sure. So I emailed her to say I'll check again on Monday. And then Renee, she hasn't said anything so far.
So Tiffany, okay, I need to fix that. I need to fix the title. Lorraine, I need to get her job description and Renee's job description.
No, Tiffany, we've got all the details.
But I just need Lorraine and Renee's job description and fixed form.
That's it, please.
The form is the price is wrong. But how I get the price wrong in that one?
I don't know. Well, because you've been so busy. Yeah, dashing from here.
But how I get 2,700 on the
Miguel, I can't answer. You